Hello, and welcome to my talk on marketplaces as the payment entity. My name's Rowland, and I'm a director of business development in the enterprise team here at Payoneer. Today, I wanted to have a quick and brief presentation talking around the role of the marketplaces. And really, this is looking at marketplaces as they mature and provide extra services to their sellers and how the regulators are perceiving these services. We'll talk a little bit more specifically around what the case study is in Europe, with PSD2 driving a lot of the pressure here on marketplaces and the need to take payment licenses. We'll look at some of the solutions and choices that a marketplace might face. And obviously, a lot of the question here is around whether they obtain their own money license or leverage third parties. And then I think I want to sort of focus a little bit towards the end on some of the benefits that marketplaces have for working with third parties like Payoneer. So look, for the sake of time, let's just jump straight in and talk a little bit around the context. Obviously, Payoneer supports a lot of e-commerce and marketplaces and other verticals around the world today. And as these businesses have increased in size and as the business model has become a little bit more proven, regulators have started to take a note of some of the behaviors that are happening within an ecosystem. And the fact that actually the money is sitting within, at certain points, the flow of funds sits within the marketplace's own bank account, even though that those funds are not necessarily belonging directly to the marketplace, they're actually belonging to the seller. Marketplaces have been perceived to be providing payment services to some of the players within their ecosystems. This hasn't been a well-defined space, and there's clearly a lot of ambiguity around what this means. However, we are starting to see a shift both here in Europe, but in other places where regulators are paying closer scrutiny. I think some of the sort of key areas we're seeing where regulators are waking up and talking about this, there's been a lot of focus in the United States around money transmission. We'll talk about this a little later in the deck, but this is certainly very complicated for businesses looking to scale across all of the states independently and how they actually govern this. Clearly, a matter close to my heart is PSD2 here in Europe, and following on from the first payment services direction, there's quite a lot more clarification around how marketplaces specifically can be required to take a money license. I think in the past, they've managed to rely on exemptions. And then I think there's sort of interesting trends coming from the Asian market specifically. I guess one we could pull out is looking at Singapore, and there's a lot of information out there around some of the policies that are appearing here. I think another note is that across Payoneer's ecosystem and a lot of the conversations we're having with marketplaces is that it's not just a decision driven from a response to a regulation or a regulator's scrutiny. A lot of businesses are concerned about what the implications are of sitting in the money flow. And some of them have to ask themselves strategically, is this something and a burden they want to expose themselves to? And certainly there's quite a big complication and distraction that goes along with providing sort of financial services. And this is a question we can go into later in the presentation. A lot of the kind of thought process and thinking here sits on what's been happening in Europe. And I would say this isn't because we're biased or anything like that. It's just that there's some precedent in the space here. The Payment Services Directive has not been a new concept. Clearly under PSD1, there's been a lot of work in this space. I think it's just the easiest to see actually where European regulators have actually put a lot of thought into how this might apply. And some of the things that are driving these directives and licensing exemptions have become the core principles around PSD2. For example, there's clearly a lot of focus around driving security for customers. There's a real big push for sort of open banking and opening up competition within the region. And then under the sort of licensing piece, there's a whole sort of section around it's better protection for the customers and ensuring those that are sitting within the money flow have the correct sort of licenses and guarantees around the protections that you'd expect from a bank providing similar services. These are certainly themes that we're seeing and principles we're seeing applied by other regulators. I think one of the interesting things around PSD2 and is certainly how this has been interpreted on a local level. And as national regulators transcribe this into law in different countries, clearly different regulators take different views. But I think what's important here and the takeaway for us talking about marketplaces today in 2020 and beyond is that these actually have quite important impacts on a business. So let's just look a little at the journey and how businesses have been responding. Under the first Payment Services Directive, there wasn't quite a lot of clarity around a platform business model. This kind of idea of being a broker between buyer and seller as a third party was relatively new as a business model in this sense, and there was a fair amount of ambiguity. So at a national level, a lot of the regulators took different sort of rules on the licensing requirements and who could apply for exemptions. And this kind of ended up with a bit of a piecemeal approach, which probably wasn't what the regulators had in mind when they put into place the Payment Services Directive. I think it's interesting to see that even now certain countries in Europe that are taking a more stringent approach. You can certainly look, for example, towards BaFin in Germany, where they've actually had a whole load of sort of national regulations and guidance around businesses taking licenses, or platforms, I should say, taking licenses since early 2014-15. And this is really echoed by a lot of the work that's now under PSD2. But as PSD2 came out, there was a few more clauses and a bit more tightening of the scope. And really, I guess the key difference here is making the exemptions applicable for businesses that are acting on behalf of only one side, i.e. just for a payer or just for a payee. These are kind of more akin to reseller models. And this has really meant that a lot of the kind of traditional marketplace models are now required to obtain a payment license. I know some of you and all could be cynical that there isn't a lot of fines running around for this, but it's something which under all the different components of the Payment Services Directive is quite explicit. And we're starting to see it coming into force, certainly within Europe. I'd say looking at some of the business, I think in the Netherlands, this is actually now something which is being actively addressed by the regulator to the point of outreach to all marketplaces. And you do see it, new businesses are entering new markets. This is something that's going to change and require businesses to wake up and have some kind of consideration for. What this looks like in a schematic kind of sense, clearly that the sort of relationship in the past has been very much one where a consumer, you and I, might be shopping for something on the marketplace. The fund flow would look something like I would go through the checkout page, through whatever APM or acquirer. The money would normally be held at the acquirer on the benefit of the marketplace in their merchant account. These funds would then be settled to the marketplace's bank account quite often before being paid out through whatever payout provider or system they have in place to the sellers. And the issue with this money flow, and this is specifically what PSD2 is now trying to address, is that at the point in the middle of this where the marketplace is essentially touching the funds, is holding the funds in their bank account, marketplaces can be seen to be providing payment services as they have really a lot of possession and control over funds which do not necessarily belong to them. And I mean, think of the worst case scenario where a marketplace might even go into administration. At the point that the money is sitting in the marketplace's bank accounts, administrators are clearly going to seize those funds that don't belong to a marketplace. So a lot of this, as we said at the beginning, is really around protection and transparency for who owns these funds the entire way through the sort of transaction value chain. And this is kind of where we are today. So again, this isn't something that's just in Europe, but what we're looking at is a response that businesses have taken and really what the options are for compliance. And as you can imagine, they all come with their own sort of nuances, pros, cons, and everything in between. I think it would be no surprise. Clearly, a business could go out and get a money license. The question would be where they get these licenses, how they can passport these licenses. And then there's the process of obtaining and maintaining, which we'll talk about in a moment. But it is an option that we've seen, certainly with a lot of the larger marketplaces in Europe. There are those businesses that could still pursue an exemption. I would say that this is not something we've seen as many push for. It does involve changes to a business model. It does involve quite a lot of legal consideration, and is still going to involve you going to each national regulator and arguing your case for the exemption. It's not something where you could passport one exemption around the whole of the European region. And in our experience, this is still going to be a very kind of painful process to rely on. And again, not necessarily all that scalable. And then there's the third part, which is to use a technical service provider exemption. And this is kind of where we're, certainly as Payoneer, as an advocate, seeing and having some very interesting conversations around being able to leverage a third party that specializes in providing these payment services, and requiring that the marketplace then just acts as a TSP, as a technical service provider. You can then leverage the capabilities of your third party provider to ensure that you're compliant. I would point out that there is probably a fourth route on here, and that's to do nothing. Clearly, that is a choice. I would say that's probably not one that you want to maintain over the long run. I think it's probably something which we're seeing regulators crack down and card schemes wake up to. So I think this is certainly something that's not going to be a viable solution in the future. Ultimately, the largest question, I guess, out of the three is for businesses operating at scale or looking to keep operating at increased scale. And the payment license is certainly at the top of the list of considerations. And yes, it has a lot of benefits. I mean, for example, you could easily operate across the region with peace of mind in all countries. However, there are some considerations, and I think this comes back to understanding what payments means to your business and what having a financial license would mean to your business. If it's core, then great, and this is something that you want to pursue. But for those that are still sort of deciding and thinking about it, there are probably a couple of considerations. Namely, it is a resource-intensive process. This is something that takes a lot of time to obtain. It takes a lot of money to ensure that you have the right experts in place, and it doesn't necessarily guarantee success. You could go through all the process and the application fees and still may be rejected. The time process is not only for the application, filling out the applications, but also longer than this, can take something in the region of 2 to 4 years, depending with which region or regulator that you're filing. Clearly, this isn't going to solve the issues that you'd have today. And although you may be able to get some exemptions or clauses, clearly working with a third-party provider can help bridge the gap. These payment licenses also come with quite a few ongoing responsibilities. I think from one side, there would be the kind of obvious around maintaining capital requirements. And then there becomes the whole piece around risk and compliance. You start having to build specialist functions and hire specialist personnel to ensure that you're meeting all the obligations that go with maintaining a payment license. Well, we would say that all these separate points sort of consolidate into one, and that is a lot of this could detract from your core. This comes back to my original point. If this is something which is clearly going to empower your strategy moving forwards, then great. In other instances, and certainly sort of coming into the uncertain economic future ahead, something like this, which clearly takes up a lot of economical investments, time and resources, the question is this the best use of them today? And then there comes the options, and this is what we touched on. So Payoneer today is working with a lot of our marketplaces to explore the exemption, the ability to work with a third party. And this is kind of just a solution and how it would look. So again, looking at the payment flow, any PSP or acquirer would be able to still settle the sort of initial checkout. These funds would then be held at that stage on the behalf of the payees, so the sellers in the system, no longer the marketplace. And in the flow where we work with our marketplaces today, we actually often ask the PSPs to settle directly to Payoneer, and we ensure that there's the right sort of contractual relationships around this to maintain compliance. Payoneer then holds these funds in a specialized bank account for the benefit of the payees and clearly for the fees of the marketplace. We ensure that these are safeguarded and everything is maintained how it needs to be to ensure that the regulators in each jurisdiction is happy. And then at the right point, we provide the actual payout capability. So still the marketplace will provide and act as the TSP to ensure that payment instructions are being provided. And we are the ones that would facilitate this, with the fees being placed back to the marketplace or the funds to the sellers, wherever they are in the world. This is the flow that we're seeing today, and we're seeing great success with this in Europe, in the US, and in places further afield where marketplaces are asking to stay out of the payment flow. I think what this then opens up is a second question, and that is obviously in the case where you utilize a third party that specializes in providing this kind of payment infrastructure and payment platform, there's a whole host of other benefits that can be unlocked. One of them is, and this is a really interesting use case in Europe, is that you're no longer tied to one provider. There are some providers that are out there that provide you an end-to-end marketplace solution. You're tied in one provider from end to end, from pay in to pay out. And this is great in some use cases, but in other instances, we've seen platforms that are operating globally or at scale, wanting to really sort of select different PSPs in different regions, whether it be for better costs or better capabilities. Payoneer doesn't mind who the PSP is, and in fact, we actively encourage through some of our other product offerings that you use whoever you want, and in the background, we'll ensure that the flow remains compliant. We'll work with these providers to ensure that the funds are settled to Payoneer's account and held on the benefit of the payees. The solution clearly is no success if it still involves a lot of work for a marketplace. So we do everything that we can to ensure that there's a minimal impact on the operations and that we can ensure that there's a seamless payment flow from pay in to pay out. I think a key point to pay here is in these kinds of payment flows that we're working with sellers all around the world. We know how to do the KYC, we know how to do the payout from providers across Europe, the US, and further afield. This means that we can ensure that we're offering a payout service that is scalable and global, and again allows you to leverage the pay-in providers that you feel happy with whilst maintaining PSD2 compliance. And the last point is around cost efficiency. If you think not only from one side on the resources it takes to obtain a money license, we're saving you a lot in terms of upfront CapEx. But as we move forward, it allows you to be able to continually to optimize this business flow, this payment flow. What I mean by that is that this allows you to unlock some additional financial services that we've invested a lot in. And this could be across a whole range of different capabilities. I probably just touch on three here. One is being able to unlock the capability to do FX management and FX optimization between holding sort of global treasuries with Payoneer. No longer are you holding this in sort of separate and disparate accounts. This allows you to optimize really the cash flow within your whole ecosystem, maintaining it in one place, maintaining one single view of all your programs, and ensuring that the payouts are managed. And then the last point, which touches on what quite a few of my colleagues are talking about as well within this conference, and that's allowing you to unlock payment orchestration. Again, with the ability to work with an orchestration platform on the front end, you can then leverage any of the PSPs or APMs in your network to be able to then settle to Payoneer in a compliant way that, again, maintains you outside of this regulated flow. So I know it's a nuanced topic to look at, and I think fundamentally there are some key takeaways that we can focus on. One is that this is kind of a very thematic thing we're seeing today. Regulators and schemes are really growing increasingly stringent right around the globe on the operation of a business model such as a marketplace. This really has quite a lot of implications, especially with their focus on payment licenses and the requirements to do so. This then creates the question of what a marketplace should do. And there are a whole host of options that can face you today. And the question is, what is aligned to your strategic goals? And thinking about timescales and the opportunity cost of your resources, understanding your priorities is really key. This isn't all sort of a negative. This opens up an opportunity for you to leverage partnerships that really go beyond just ensuring your compliance. It really can help you accelerate your global growth. You can unlock a whole host of other benefits and really develop to hit those business goals that you're looking for. So look, I'd love to talk further about this. I'm more than happy to answer some questions and would love to talk to any of you offline around this. feel free to reach out and ask any questions. Otherwise, I hope you enjoy the rest of the conference, and I look forward to talking to you soon.